The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the technicals, just a quick recap, of course, on that CPI print that we saw with inflation coming in at 1.9% year on year. The June monthly trimmed mean at 2.1%. We're also very closely watching what is happening with the US-China tariff truce, oil prices rallying on US pressure on Russia. And of course, we're monitoring this news of an earthquake in Russia as well. Gold holding fairly steady ahead of the FOMC meeting this evening. Let's get into the technicals though. Chris Weston from Pepperstone joining me. And of course, we've just seen the Aussie take a little bit of a hit because it does look like the RBA now will cut rates next month, Chris.
Yeah, you got to think it's all systems go. I know that they've got this kind of gradual, and cautious and gradual kind of sort of mantra they're running with, and we did know that the Governor Bullock had recently said that it was more of a timing issue rather than a directional issue that we found through. But yeah, I think the markets has really put this Q2 number as the last linchpin, effectively, of the last obstacle in the way of potentially removing a cut. We've been running with sort of 90% probability implied in the swaps market for a couple of weeks now, and we look at now, and we've got a 94% implied probability priced into the markets, and we've seen a little bit more coming into the December meeting as well. So yeah, I know we were shocked at the last meeting, and they sort of went against market pricing in quite a big capacity, but everyone's saying, well, it's down to this CPI number now, and it's come out. The trim mean number was the one that everyone was looking at, and the quarter-on-quarter print was a little bit below consensus. The annualized rate though is 2.7%, which is pretty much bang in line with consensus. Is a smidgen higher than where the RBA were forecasting at 2.6%. But yeah, I think this is a number now which represents a continued moderation in prices. And yeah, I think the market's now saying that this is done. Yeah, we're going to get a cut coming through the next meeting. So cautious and gradual, but this would constitute that. And we're still looking at 2 cuts this year, probably in the market's eyes, going into the terminal rate. And you're really sort of looking 3.1% is really sort of terminal cash rate on the current projections that we're seeing at the moment. So we have seen a little bit of selling in the Aussie dollar. We've seen the Aussie dollar actually a strong performer through the month of July. It's really been only fallen really against the US dollar, against the yen and the pound and the euro, and against the New Zealand dollar. We've actually had quite a good run recently. But you can see, in the on the move on this is we've probably dropped about 15 pips or so. So it's not prolific by any means at all, but yeah, we're already pricing in quite a large degree of rate cuts already in that situation, which has cushioned the fall, and the market is still pretty short of Aussie dollars on the for real money accounts. But if you have a look at the sort of daily chart now, I'm not sure if you've got the chart there, you can see that this has been the chart that we've been running with pre-CPI. So it's pulled back below that blue line, which is the 50-day moving average, which has been a bit of a trend filter for traders. We've traded down to there, similar in euro dollar, which we might have a look in a second. But this has been we've been making these higher lows coming through consistently, and that 50-day moving average has been the sort of default trend filter that people have been buying into when it hits that level at the moment. In fact, actually, if you look at Aussie dollar, there's very little correlation between interest rate differentials between that of the RBA and the US. It's really there's been a bit of a position shift today, nothing spectacular, but it's what we actually been seeing in the Aussie has more been a reflection that equity markets and the S&P are all-time highs. We've got the NASDAQ all-time highs. We've had outperformance from the Hang Seng, and also industrial metals have been on an absolute flyer as well recently. So I think that's really been the bigger issue for the Aussie against the US dollar, as opposed to that. If you want to play rate differentials, you do so against the Kiwi dollar. So this won't have done it many favours today, but yeah, we're on for a cut now in August, basically.
Yeah, all systems go. Really nothing now to stand in the way, especially as they said that that's what they were waiting for when they shocked the market this month. Let's have a look at what's happening with the euro dollar, particularly as we saw the agreement on trade and the tariff rate set there. You've got, though, a little bit of, weakness against the greenback at the moment. So the euro holding around $1.1545, is that right?
115.66, around that.
Okay.
Similar sort of levels what you're saying there. I mean, I probably took that chart an hour ago or so. But really, I mean, you can see that sort of horizontal, sort of blued out area, which has been the sort of technical support, which we've broken through now. We'd like to see a bit more of a push and a rejection of that level. But again, I mean, similar to what we saw with the Aussie dollar, that 50-day moving average, which is the blue line there, you can see. Actually, this is the chart of the Aussie dollar, I think you've got up there. Maybe I'll send you the same one. Anyway, but you can see that we've traded below the 50-day moving average. We've closed below that level. The question now is can this kick lower? Because really, if you have a look at the technicals where we saw buying coming through off this average back in March and April, it has been another defined trend filter for traders, and it's looking heavy now as we go into non-farm. We've got the FMC meeting tonight, 4:00 in the morning, and then we've got the non-farm payrolls number, which the non-farm payrolls number for me is far more important actually than the Fed meeting, and I think that's where you're going to get potential moves in the Aussie dollar and against the US dollar there. So really, I think the payrolls number on Friday is probably the big one. After what we saw from the JOLTS numbers last night, can this kick? I think positioning is obviously a big thing, but the technicals at the moment are saying, let's be a little bit cautious against trying to rally against this move lower. There's not a huge amount to like about the US dollar at the moment, to be honest, but the market will do what it wants to do. And I think if we were to see, further positioning unwinds from US dollar shorts, then euro dollar is probably a better buyer at 113.
The market's always going to do what it wants to do. Just very quickly, Chris, speaking of the NASDAQ as well, particularly when you've got Meta, Microsoft coming through with numbers.
Yeah, exactly. I mean, we're not a million miles away from all-time highs there as well. So you are looking at a market which is still pretty strong. I mean, it's hard to be bearish in this market there. As you can see, it's holding those short-term moving averages to the downside. And until that really cracks, I really don't want to be short this market at any capacity. Volatility is still incredibly low, both realised and implied. And people are these markets are just grinding higher. But yeah, I do think when the market's at these kind of levels, you Meta, market loves it. Apple less so, but it's probably a 2026, late 2026, early 2027 story. But you've got these big names coming out representing a significant amount of market cap. With markets at all-time highs, you've got to blow the lights out. The market's looking for about sort of 5-6% move on the day of earnings, up and down, and that means you've got a big market coming after market, high expectations, the bar raised. Will they blow the market out of expectations? Will they guide to capex spends and data center spends that keeps the AI play going? It's a big night. It's going to be trading just after the close. The NASDAQ, is grinding at the moment. It's just that low volatility shift we're seeing at the moment. Will we see life coming through? I think these numbers tonight are going to be very, very important, as to an extent the Fed, more so the non-farm payrolls number.
Absolutely. Important night as always. Chris Weston, thank you from Pepperstone. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.